Want to shop homes in Lancaster with confidence? Start with a rock solid pre approval. In the next few minutes, I'm going to show you exactly how. I help first time buyers, sellers, and investors all the time go from that we're just looking phase to the we've got our keys phase without the guesswork. So, what is a pre approval? A pre approval is a lender's written statement that, based on verified information, they're willing to lend you up to a certain amount. It's not a final loan, but sellers are going to take you seriously when you have it. Why these feel invasive and why that's good. So, a quick reality check: yes, it can feel invasive. Lenders are going to verify your assets, debts, credit, and even large deposits. They're documenting your ability to repay and protecting you from taking a payment that could wreck your budget. Think of underwriting as your loan safety inspection. If your target move date is around a year away, here's how to work backwards: 9 to 12 months out. What you're going to do is you're going to pull credit and fix any errors. You want to drop all credit card balances below 30% utilization and start your home fund, down payment, closing costs, and have 2 to 3 months of reserves, keeping your income stable and avoid job hopping if you apply soon. 6 months out, you're going to want to go and interview at least 2 local lenders, a bank or a credit union, or even an independent mortgage broker, someone who can shop around for the best deal. Ask about their turn times, whether they have any Lancaster County experience, and also any local incentives that they may have. Get an estimate of your comfortable monthly payment that's going to align with your budget. 2 to 3 months out, go and get yourself fully pre-approved, not just pre-qualified. This means they're going to pull credit and they're going to look at your documents, your pay stub, your W-2s, and get it verified by underwriting. You want to also look in price shop homeowners insurance and title costs so you can have a baseline of your overall closing costs altogether. 0 to 2 months out, you're going to start touring homes with your agent. Make sure you stay in your lender approved range, and I would even recommend looking slightly below that. So let's say if you're approved up to 300, look at homes in the 275 to 285 range. Your lender may ask for updated pay stubs and statements at this time, but we're on the final stretch. Here's a step-by-step guide to getting pre-approved with the lender. Step number 1 is to choose your lender team. Local appraisals, condo quirks, and title timelines are much easier to deal with when lenders know what's going on in our market. Number 2 is to submit the application. You will get a hard credit check. This is totally normal, so do not panic. Step number 3 is to upload the required documents. Underwriting is then going to verify your income, your assets, and credits, and we're going to go through these documents in a moment. Step number 4, you're going to receive your pre-approval letter. It's going to show you your max amount of purchase price or your loan amount and any other conditions that you may have when you go to write offers. Step number 5, keep it current. Let's say you take more than 60 to 90 days to find a home. You're going to have to send in fresh pay stubs and bank statements as they get requested. Here are the documents you're going to need to get pre-approved. Typically, everyone needs a driver's license and social security number, 30 to 60 days of pay stubs or benefit statements, and the last 2 months of bank statements. This means all the pages, even the blank ones. You're also going to have to provide W-2s, 1099s, and federal tax returns for the previous 2 years, your last 2 years of residence and employment history, statements for retirement or brokerage or investment accounts, and landlord info or your current mortgage if applicable. If you're getting gift funds, a gift letter from the donor or proof of funds if you're using gift money. If you're self-employed or commissioned, plan on having 2 years of business returns plus K1s if applicable. Year-to-date, profit loss and balance sheets, and 3 to 12 months of business bank statements so they can see exactly what's been going through your account. Here are some good rules of practice when going through the process. Keep your debt and income reasonable. The lower your monthly payments, the more home you can qualify for. You want to avoid any new debt, so don't go out buying cars, furniture, and any buy now, pay it later can really hurt your approval. Keep cash traceable. Large deposits must be sourced, so don't bring any random cash with you to the closing table. Don't open any new lines of credit without asking the lender first, and document any life events, including bonuses or support income if they help you to qualify. When should you apply for your pre-approval? If you're applying in the next 60 to 120 days or sooner, you want to apply now before you start looking at homes. In our market, it moves extremely fast, so when you find the right home, you need to be able to jump on it straight away. If your credit's not necessarily where you want it to be, you want to apply 3 to 6 months early so you can get yourself a plan. To set yourself a plan and hopefully give that score a bump so you can get yourself a lower payment. Next up, we're going to look at the different loan types we have available to us in Lancaster. So first of all, we have conventional, great for credit if you're 680 plus, putting 3 to 5% down. You will have mortgage insurance, but this can get rid of when you have over 80% loan to value. FHA is 3.5% down. The credit can be a bit more forgiving, needing a 580 plus, but you are going to have mortgage insurance for the lifetime of the loan. For VA, eligible to veterans, you can do 0% down, there's no monthly PMI, and you may be able to get your funding fee waived if you have disability. USDA is another 0 down, but you have to be able to be eligible in that particular area and also income limits. And a lot of areas in Lancaster also are able to get approved for PHFA. This is a forgivable grant which helps reduce your cash to close. Some people can do 100% financing with an 80-20 conventional loan, but again, there are qualifying restrictions. Moving on to closing costs in Pennsylvania and how to reduce them. So closing costs, what are they? Typical closing costs include your lender fees, appraisal, credit report, title search, title insurance, county recording, Pennsylvania realty tax. Typically, transfer tax is around 2% in Pennsylvania, 1% paid by the buyer and 1% paid by the seller, but it is also negotiable in the contract. You're also going to have to prepay some property taxes, homeowners insurance, and interest from your closing date to the end of the month. Now, I know if you're getting stressed about all of those various fees, but here's a way to help lower that cash to close. First of all is asking for a seller credit as long as you're within your loan limits. This is great in slower areas, but it can reduce your competitiveness on hot listings. You could also consider a lender credit. Slightly higher interest rate, fewer upfront costs, and make sure you shop around for title and home insurance. Also, if the timing works, if you can close near the end of the month, you're going to have fewer days of interest to prepay. Lancaster timing from writing your offer to getting your keys. Pre-approval letter, often the same day to 48 hours once you put all of your documents in. And from once you get under contract, commonly it's 30 to 45 days. If you have a fully underwritten file and fast responses, you can close in 21 to 28 days. What not to do if you're under contract. Once you are under contract, please do not do any of the following. Apply for a new credit card, or any big financial purposes. Do not move large sums of money without a paper trail. Do not change jobs or pay structure without lender guidance. Do not close any credit cards or dispute any account mid-process. Don't miss any payments ever, and do not lend your down payment to your family. And if you're getting a gift, you are going to want to follow the gift letter rules exactly. If you're ready to get pre-approved the smart way, I can connect you with some trusted local lenders and help you get the best loan for your situation. Sign up for a free 15-minute game plan call in the link in the description below. If this has helped, tap like and subscribe for more Lancaster market tips and drop any questions you have in the comments. I'm Albert Linsdale. See you on the next one.